Chapter 10, God's Answers. I'm asking you to join me in a battle to protect the freedoms and greatness you've inherited. These are freedoms that your founding fathers literally risked their lives for and many times died for. It's now your responsibility to pass them on to the succeeding generations. You don't have to be a rocket scientist to see what has happened in the places and times where wicked and evil people have all the money. You do need to wake up to their evil intentions, where fear drives you to accept their leftist solutions. These solutions always steal your freedom while imposing greater restrictive control on you. You need to be a part of the God-honoring movement that goes head-to-head against these forces and their evil agenda. You can show the world that your God is the God of unlimited love, abundance, and power. Show it what happens when his kids, including you, have the really serious money to live your own life of biblical abundance and be blessings to others. This is what honors God and pleases him immensely. Know this for the fact that it is. This is in complete and total alignment with God's will. My intention with this ebook is to start this movement with a Bible-based roadmap, an instruction manual of sorts. I don't by any stretch have all the answers, but I'm at least out of the chutes and into the arena. I'm looking for God-honoring partners to join me. Will you be one of them? Look at what God has to say about this idea in his owner's manual, Bible, in Matthew 19:26. Jesus looked at them and said, "With man, this is impossible, but with God, all things are possible." How about this idea? Use some of the increasing wealth you will create when you take over the banking function of your operation to bless others. You don't want to have to answer to your kids or grandkids when they ask what you did to keep America free, and your lame answer is, "It was too much for me to do anything about it, so I didn't do anything." This answer is completely unacceptable. You do not want it to be said that on your watch these freedoms were lost. I hope you see this the same way. The consequences of losing this battle are too devastating to contemplate, let alone permit them to happen. I truly believe that God made every one of you on purpose and with a purpose. The Bible has a great deal to say about this too. Ephesians 2:10, "For we are his workmanship, created in Christ Jesus for good works, which God prepared beforehand that we should walk in them." Jeremiah 33:3 says this, "Call on me, and I will answer you, and show you great and mighty things which you do not know." 1 Peter 4:10 tells you, "Each of you should use whatever gift you have received to serve others, as faithful stewards of God's grace in its various forms." Jeremiah 29:11-13 makes it very clear, "For I know the plans I have for you, declares the Lord, plans to prosper you and not to harm you, plans to give you hope and a future. Then you will call on me and come and pray to me, and I will listen to you. You will seek me and find me when you seek me with all your heart." I want you to imagine what your world would look like when everyone puts these biblical instructions into actual practice rather than just quickly read over them to check off the box. Dare to ask yourself, what would you do if you knew you could not fail and money was no longer any concern? Would the world be worse off or better off because of your answers? I firmly believe it would be far better off as long as your answers are aligned with God's will. I want you to just imagine implementing what you are learning here about taking over the banking function of your operation. It would profitably position you to successfully accomplish God-honoring projects you never before thought were even possible. I dare you to do something really big and bold. Here's an idea to get your thinking started. Do you know any young first-generation regenerative operator wannabe, family member or not, who would love it if you could teach them all you know about operating regeneratively? Then you set them up so they can start out making this world a healthier and better place. What about starting them out so they're not drowning in debt? When you partner with God, you are no longer operating on your own. Remember, Take on life-changing challenges that are so big that they scare you. When you partner with God, the results are no longer entirely dependent on you. To give you a perspective on how great this would feel, think about how it would make you feel if it was you on the receiving end of such a blessing. I honestly believe you couldn't live 100 lifetimes and put a dent in all of the worthwhile causes, people, and projects that would directly benefit from your God-honoring success and generosity. It comes down to education to know His will, then act on it. It's all waiting to be found right there in His owner's manual, Bible. Then you will need to have faith and trust in God's plan, which is always vastly superior to worldly efforts. Let this really sink in this time before you read past this scripture again, so you'll really know what God's word tells you in Isaiah 55, 8, and 9. For my thoughts are not your thoughts, neither are your ways my ways, declares the Lord. As the heavens are higher than the earth, so are my ways higher than your ways, and my thoughts than your thoughts. It's all about using your God-given skills and talents to not settle for just barely making a living, when you can make a God-honoring difference for the benefit of others with the same effort. The kind of difference that honors and glorifies God and still has plenty left over to reward your family and you. Here's a question followed by a thought for you to contemplate. How many people are going to miss out on the blessings God put you here for if you don't figure this out? Your family deserves your very best, but they're only going to get your best if you get it to them. Chapter 11, The Spiritual Nature of Money. In his book, Business Secrets from the Bible, Rabbi Daniel Lapin suggests that God has ordained for his children to thrive best in an environment of community. He says you're at your best when you live together in community and help each other out. God planned this all out, and He has given each of you specialized skills, talents, and interests. You optimize these gifts when you share them with others. He says when you share your skills and talents with somebody else, and when you provide value to them, they'll gladly reward you with thank you notes. Mortals call these notes by the term money. Rabbi Lapin goes on so far as to say that money is not just material, it's spiritual. And you know what? I'm not going to argue with him. The Jewish culture seems to have a special anointing when it comes to matters of money. Keep in mind that God created all physical things out of nothingness by speaking them into existence from the spiritual world. Money, especially paper currency, has nowhere near any actual value that is placed on it other than how much you agree to value it for. Chapter 12, Banks, Rate versus Volume. Before we go any farther, I want to share some information with you that you most likely have not been prominently made aware of. It's a kind of out of sight, out of mind kind of thing from the bank's perspective. Yes, there is truth in lending, but I can't really see where your friends at the bank would want you to be distracted by this depth of truth. My observation tells me that for them, it's probably a let it slip through the cracks issue. When you do the math, banks intentionally divert your attention from interest volume to interest rate. It's always a much smaller number, and your brain is wired to think smaller is better when it comes to money you owe. Here's what I'm talking about. With a $200,000 equipment loan at an interest rate of 6.85% for 6 years, the monthly payment is $3,395.41. This makes the total interest volume to be $44,469.52. $3,395.41 times 72 minus 200,000. This is 22.23% interest volume, $44,469.52 divided by 200,000. How does 22.23% interest volume stack up in your mind compared to the 6.85% interest rate the banks want you focused on? Here's another example for you to let that sink in. With a $400,000 mortgage loan at 6.8% interest rate for 30 years, the monthly payment is $2,607.70. This means that your total payments are $938,772, $2,607.70 times 360. This makes the total interest volume of $538,772, $2,607.70 times 360 minus 400,000. This equals interest volume of 134.69%, 538,772 divided by 400,000. Bottom line, this means you bought and paid for one house for yourself, principal, while more than paying for a second one, interest, the bank gets to keep. Do you need reminding who is the biggest beneficiary of that deal? Now you can understand why lenders don't want you to be distracted by this pesky truth about interest volume. By now, if you're not seeing how much potentially increased profitability you're not benefiting from, I'm not sure how much I can help you. Chapter 13, Your Own Banking Alternative. In the next part of this ebook, you're going to see how you can do much better, how you can align your finances with godly principles and break free from this system of debt and deception. First things first, what I'm about to share with you isn't an investment in the traditional sense. In fact, it is absolutely not a true investment in any way, shape, or form, any more than parking your pickup in a barn makes it a horse. There is a great deal of misinformation out there showing what a great investment IBC is. I know I'm going to rack up some serious backlash for this, but it is the absolute truth. There's a prominent group of IBC advocates out there promoting the use of IUL, Indexed Universal Life policies, to be used as investments and that they are superior banking alternatives. If you believe that potential anything is better than guarantees, this might be the right option for you. IUL policies have no guarantees, period, and they do have a lot of fees that are not that easy to detect or identify. Long story short, bragging that this is a better way to invest is like bragging you have a three-legged chihuahua that won a race against a dachshund. Neither one of them would do well against a greyhound. God simply did not design them for that purpose. Don't get this twisted. The strategy is called infinite banking concept for a good reason. Nowhere does the original founder, R. Nelson Nash, call it the infinite investment or even savings concept. This confusion or misrepresentation happens when you're dealing with ideas where you have little to no background or experience, and is compounded when you're dealing with advisors whose ethics or experience is limited or questionable at best. Not very long ago, I heard a newbie advisor brag that 70% of your investment portfolio should be in this product. He really impressed the manager that trained him with that much ignorance. But he would not impress anybody that knows the fundamental difference between a true investment and an insurance policy. This is precisely why it is crucial that you work with a knowledgeable and experienced IBC advisor with integrity who can tailor a plan to your specific goals and objectives. For the same reason you won't see any Clydesdale horses winning the Kentucky Derby or thoroughbreds doing well at pulling heavy equipment, God didn't design them for that purpose either. From a similar standpoint, IBC accounts are not designed to be true investments. Incorrectly, they can be compared to investments because they have some investment-like characteristics. The fact that they have these investment-like characteristics, cash value, does not change their fundamental nature or true function. Without going too deep into the weeds, cash value is specifically designed to be a policy reserve. In the proper context, I believe it is an excellent warehouse for capital. It is designed to guarantee the policy premium will never increase even when the risk of a claim does increase every single year. This obviously happens because each year you do live, you get 1 year closer to spend eternity with Jesus, and this would trigger a policy claim. I will show you the numbers that guarantee to back this up later. I have personally asked multiple seasoned advisors with at least 20 years experience why insurance companies have designed insurance policies to have cash values. Shockingly, not one of them has even known why. Come to think of it, if an advisor is promoting IBC to you, ask them the same question. If they don't know the answer or don't have an answer very similar to mine, you're not dealing with an experienced and knowledgeable IBC advisor. There is a significant chance that, out of ignorance or intention, they will be more focused on maximizing their compensation than your benefit. Either way, it is not fun to end up on the short end of any stick. Buyer beware would be a good advice in this situation. However, in the arena of banking alternatives, properly designed IBC accounts perform exceptionally well as a reserve storage account for capital. A knowledgeable and experienced IBC advisor can make certain that you benefit quickly from your account in a huge and increasing way, but you don't have to die to win. Remember that your beneficiaries are guaranteed to receive an income tax-free legacy death benefit in cash when you do die. This is in contrast to certain financial entertainers out there that don't heavily promote the bothersome requirement that in order to collect on term insurance, you do have to die. Here's a simple question. How much money are you comfortable paying for something where you have less than a 2% chance of collecting anything back? The simple reason IBC policies do not function well as good investments is because the IRS requires that they have to include a specified amount of death benefit, life insurance, in order to retain the tax advantages that come with them. By the way, this should make a couple of financial entertainers, names withheld to protect the guilty, very happy because this requirement is most commonly accomplished by temporarily using term insurance. No matter how this is packaged with bells and whistles, nowhere is that insurance benefit available for free. A properly designed IBC policy is a financial tool, an excellent banking alternative, not a banking replacement, that can help you make your money work harder for you. It's true that you do owe interest to the insurance company for a loan, but you never pay any fees. At the same time, you are literally generating guaranteed, uninterrupted compound interest on the entire cash value with IBC accounts, even when you are using borrowed money somewhere else. Think about this very closely. How much total interest and fees have you already paid out to traditional lenders for all the capital you have ever borrowed to run your operation in the past? What about the money you are currently borrowing, or any more money you will ever borrow in the future? That amount of money over your entire lifetime, especially compounding an interest, is a huge number. Ask yourself how much interest have you been paid on the money you have borrowed too. You'll see a very small example of how big this number is later. You will never get a dime of any of that money back from a lender either. I can never forget that my grandpa instilled in me a virtue to this day. A man's word is his bond. I don't believe he would accept me shading the truth or misrepresenting that in any way, and I would not want that on my conscience ever. With IBC accounts, you will never have to go through the uncertainty, stressful hassle, or intrusive, time-consuming delays of accessing money either. Ask yourself a simple question. What benefit do you derive from paying thousands of dollars of ridiculous fees to the banks to hopefully get approved to borrow their fiat money? Just imagine how much better you'll sleep at night knowing with absolute certainty that you will never have to deal with any of these inconvenient nuisances or loss of control because you are both the borrower and the lender. You access the cash via totally unstructured policy loans. Being the banker and the borrower working with unstructured policy loans means you set the start of the repayments as well as the timing, amounts, when they're due, and how long they will last based on their suitability and convenience for you. Even interest-only repayments is another option, and temporarily suspending repayments altogether can be done if you ever need it. You also have the flexibility to change any of these parameters anytime you need to. The only thing you don't control is the interest rate, which is set annually by the insurance company. Currently, it's in the 5% range. Contrary to certain talking head financial pundits out there, you are not paying interest to borrow your own money. Your cash value merely serves as collateral, not principal, for a loan taken from the insurance company's general account. This is why 100% of your cash value continues to generate uninterrupted compound interest on the entire account value, even when you are using the money anywhere else. Your money is literally working in multiple places simultaneously. There is considerable confusion and outright deception going on out there, so please don't get this twisted. IBC cash value is not an investment or even a savings account. It is a policy reserve that keeps the guaranteed premium the same throughout the policy lifetime, even though the risk of a claim increases every year you don't die. For the same reason that Clydesdale horses don't win many Kentucky Derbies and thoroughbreds don't do well pulling heavy machinery, God did not intend for them to do those things. The cash value in an IBC account was never designed as a competitive investment or savings account, though it has certain characteristics like investments or savings. The insurance benefit required to retain the tax advantages is not free and detracts from any alternative not containing such a benefit. In its own arena, though, as a banking alternative, it is an excellent tool to warehouse money. It's a superb option that can deliver opportunities available nowhere else. Here are two good questions for you. What would you do if there is a monstrous amount of your capital escaping your attention and usage every single year because you've not been made aware of it until now? Since this is true in every operation that uses money to pay for things, how soon would you want to know? An IBC banking alternative allows you to accomplish multiple financial jobs simultaneously with the same dollar. It includes a core benefit of recovering interest and fees lenders are taking from you currently. You will see the results of this later. This has already been happening for decades and is currently being done by wealthy families and yes, even big banks. Do the names Rockefeller, Walt Disney, J.C. Penney, or Ray Kroc ring a bell? Major banks carry billions, that's with a B, of dollars of cash value life insurance on their books as Tier 1 assets because of the safety and liquidity involved. On the internet, look up BOLI, B-O-L-I, bank-owned life insurance, or COLI, corporate-owned life insurance, to see for yourself. Why in the world would they do that if there are not some significant and serious benefits or advantages to doing so? This is a crude graph of how the cash value works in any whole life insurance policy. It is designed to guarantee that exactly when the policy completes its job of replacing or offsetting human life value at or before age 121, there will be enough cash on hand to pay the legacy death benefit in cash with zero fractional reserve involved ever. This graph shows the cash value of a policy progressively grows each year so that by the policy completion, currently age 121, it is guaranteed to equal the entire legacy death benefit with exactly 100 cents on the dollar. You will see the numbers for yourself when you see illustrations coming up shortly. The first several years' cash value can easily be significantly accelerated to be used in IBC applications. Be sure to work with an experienced IBC advisor of highest integrity to meet your specific needs and objectives. This is never a one-size-fits-all situation. Chapter 14. Max Funded, Dividend-Paying Whole Life Insurance. I am finally going to give you the details of what this mysterious IBC banking alternative really is. I know what you're already thinking. Life insurance? Really? But hear me out. This is not your typical life insurance policy where you have to die for anybody to collect. What actually makes a properly designed IBC account is a max-funded, dividend-paying whole life insurance policy from a 100-plus-year-old mutual insurance company. This idea was founded by R. Nelson Nash in the early 1980s. It's already been around for more than 4 decades, so it's not a passing fad. It is often referred to as IBC, Infinite Banking Concept. I know that definition was a mouthful, so let's break it down. 1. Max funded. You're putting in the maximum amount of money legally possible. Why would anybody even want to do that? Because this is what gives you access to the most cash the fastest. Set up properly, it generates significant tax benefits, guarantees substantial cash value early on, while minimizing the death benefit. Let this really sink in deep. If this is so good that the IRS puts limits on it, you can count on the fact that there are most definitely some serious tax advantages that are integral to how it is structured. 2. Dividend paying. This is referring to mutual insurance companies where you, as a policyholder, are a part owner of the insurance company. When the company profits in doing business, you share in those profits and you are paid dividends accordingly. As a part owner, you want them to be profitable. Coincidentally, these dividends are income tax free. This is just like being a member of your local co-op. As a part owner of the company, you want them to be profitable, don't you? By contrast, any profits with a stock insurance company are paid to the stockholders, not policyholders. These companies are extraordinarily skilled and experienced at doing business profitably. With very rare exceptions, they have weathered financial disasters primarily because they operate far more conservatively and cannot operate on a fractional reserve basis that has collapsed vast multitudes of traditional banks. 3. Whole life. This guarantees a death benefit no matter how long you live, currently up to age 121. This allows you to make deposits, premiums, for as long as you want. However, it is absolutely not true that you are taking on an obligation to pay premiums for the rest of your life. There is considerable flexibility here. Since statistics show that only about 25% of deaths occur prior to age 65, that obviously means that 100% of all remaining death claims occur after age 65. The odds are never less than 1 out of 1. This explains why term insurance is relatively cheap initially, because it commonly only covers 10, 20, or 30 years of protection prior to age 65 and rarely goes beyond age 65. Because of the rapidly increasing risk of death claims at advanced ages, term insurance is not affordable for the long term past age 65. With term insurance, you are essentially making a bet with an insurance company that you will die within the term of the specific policy. They are betting you will not die within that policy time frame. They fully exercise their right to make certain that the odds are heavily in their favor to not pay out a claim. Recent statistics confirm that only about 1% of term insurance policies ever pay out a death benefit, and by comparison to whole life policies, term policies are designed to expire before you do. Insurance companies will also decline doing business with you if their qualification process, underwriting, indicates they will lose money to insure you. They all have decades of successful experience to back up their assumptions. 4. Mutual insurance company. You only want to use mutual companies that are owned by policyholders and have been in business for over 100 years and have successfully paid dividends every single year. 5. An experienced IBC advisor of highest integrity will help you design your plan so that your best interest is always being served and they are not putting their financial gain ahead of what optimizes your best interest. When they do this ethically, they get the smallest commission possible so that it is truly your best interest that is being served. This fact also constitutes one of the biggest reasons why IBC is not promoted more widely in the marketplace. This is what fulfills the biblical concept commonly called the Golden Rule, found in Matthew 7, verse 12. So in everything, do to others what you would have them do to you, for this sums up the law and the prophets. Also found in Luke 6:31, do to others as you would have them do to you. I have long believed the maxim that you will very seldom go wrong doing the right thing. There is a great deal of bad advice, knowingly or otherwise, going on where people's trust is unknowingly being taken advantage of. To this day, I'm very proud of the virtue my grandpa, as a cattle buyer, taught me about a man's word being his bond. Here's the magic. When designed properly, these policies rapidly create a significant pool of money that you have unrestricted access to. The cash value grows with uninterrupted compound interest. Remember the chart showing a penny doubled 30 times on page 39. Your money, cash value, keeps compounding literally for the remainder of your entire lifetime. And here's the kicker. When set up properly, this growth is tax-free, not just tax-deferred. But it gets better. You can borrow against this cash value in your policy. You are absolutely not borrowing your own money and paying interest on it as some talking head financial pundits would have you believe. Your cash value serves as collateral for the loan, not the principal. The insurance company is literally loaning you money from their general account. It's true, you do pay interest to the insurance company, but never any fees. Keep this firmly in mind. Insurance companies can never use fractional reserve banking either. Your IBC account gives you unrestricted access to this capital without the stress, hassle, inconvenience, fees, intrusive paperwork, or delays of ever qualifying for a traditional loan. You never even have to explain what you want the money for in the first place. Try borrowing any money from a traditional lender without letting them know exactly what you're going to do with the money, let alone when you're going to pay them back. Can you see yourself sleeping much easier knowing you will never again have to go through any of the nuisances of ever having to qualify to get access to working capital, much less have to pay ridiculous fees to do so? You will typically have money in 5 to 7 business days at competitive interest rates in the 5% range today. This will never show up on your credit report either. Your credit score does not make any difference whatsoever. In most cases, your policy is also creditor-proof, meaning it cannot be attached in a lawsuit. You also get to set up the terms of repayment, such as when it starts, how much it will be, when it is due, or how long it will last. This includes being able to temporarily suspend any repayments when necessary. Do you want once a year when you sell a potload of livestock or when you harvest crops? Would quarterly, semi-annually, or monthly work better for you because that's when you have receivables available? You are even totally at liberty to go with interest-only repayments if that best suits your situation. You can literally set up your repayments totally at your convenience because now you are both the borrower and the lender. You are completely able to change your repayment schedule whenever you need to. You've essentially become your own banker since you are both lender and borrower. You are strongly encouraged to never abuse repayments, but once the money has been repaid, you can reuse it multiple times without ever having to requalify. You've read about this before, but it will position you to start recapturing the mountains of interest and fees you've been paying to banks for the privilege of using their money for any of your capital requirements without any of their cumbersome controls. By now, you should be able to see how this could potentially amount to multiple millions of dollars of additional profitability you are currently missing out on or currently throwing away because nobody has ever taught you how to create your own banking alternative. Keep this in mind. This can all be done without any additional risk or effort on your part by just changing how you do your banking. The IBC strategy gives you what I call LUC, liquidity, use, and control of your money. Traditional financial recommendations most often have your money doing just one job at a time, retirement or education savings, for example. Most often it is tied up for the longest period of time possible, and this is where you also have very little to no access to it during that entire time frame. With the IBC strategy, your money can be doing multiple jobs simultaneously, such as 1. Earning compound interest. 2. Giving you guaranteed access to working capital. 3. Potentially funding outside investments. 4. Creating tax advantages when properly designed. 5. Providing legacy capital, a death benefit for the next generation. 6. Providing potential collateral for third-party loans. 7. When properly designed, creating a source of supplemental tax-free income. 8. Paying off consumer debt in the shortest time possible. 9. Serving as a source of living benefits for chronic or terminal illnesses. Now, let's talk about how this changes the way you might think about big purchases in the future. Think about how much interest and fees you could recapture on all of your mortgage loans, operating or equipment notes, or livestock loans, or any other loans or notes for the entire remaining lifetime of your operation. How much peace of mind would you gain, and how much stress would it relieve to never again have to qualify to get the capital to run your operation. Add to this having all the flexibility you need for repayments so you can keep reusing the money over and over. You will never have to requalify to get access to capital anytime you need it either. Do your current banking arrangements have any direct impact on your plans to pass your operation on to the next generation? Compounding this same issue is when you factor in guaranteeing to do all these things in cash, income tax free, and literally for pennies on the dollar. Proverbs 13:22 clearly indicates how well God is aligned with your objective here. I have said this before, but I love what Kit Pharaoh says when scoffers say, "That won't work around here," or "We've always done it this way." If this is so good, why haven't I heard about it before? Or "It must be a scam." He tells them that there are probably operators up the road that are already successfully doing it. This is why I stated earlier that in order to be most successful, you need to have your why you want to benefit from using IBC. And most importantly, you need to be in alignment with God's will for building biblical wealth. Remember, God gets no glory when you continually struggle financially or in any other way because He is the God of infinite abundance, not lack. Pastor Jim Bakker says it very clearly. When God only provides for your needs, the earth is lacking the revelation of an abundant Father. You are definitely not sending a positive message to an already too unbelieving world that you are a son or daughter of the God of unlimited abundance when you are suicidally struggling with debt or depression. Straight up, the world desperately needs you to see you succeeding in big ways right now with all the nonsense that's going on out there. What message is the world receiving from things like fake meat, vaccines for cow farts, glyphosate, monocropping, chemical fertilizers et al., or CAFOs? This next concept might change the way you think about money. It's called lost opportunity cost, or LOC for short. This isn't some more fancy financial jargon to throw around in town at the coffee shop. Most people don't understand that every purchase is financed. It even applies if you say, "Hold up, I don't finance anything because I pay cash for everything. I'm smart enough and successful enough that I don't pay anybody any interest because I don't even need to borrow any money." What you're not seeing is because you were never taught that you either pay interest to use somebody else's money or you lose interest you could have earned when you pull the money out of an interest-bearing account to pay for anything with cash. I call this the race to the zero line that you have previously seen before in the graph on page 44. It's a powerful idea that could potentially earn you some really serious money over your lifetime. Remember, the difference between the debtor and the saver is that the debtor makes their payments after the purchase and pays interest to use OPM, other people's money. They go in the hole and stair-step their way back up to the zero line, only to have nothing when they start all over again. The saver accumulates to make their payments, hopefully in an interest-bearing account, in advance of the purchase and collect some interest along the way for doing it like this. However, as soon as their purchase is made, though, they drop back down to the zero line too. They can no longer generate any interest on the money they just spent because it is not there anymore. With an IBC account, this never happens because you are not spending your own money. You need to remember that your cash value simply serves as collateral for a policy loan, but not the principal. So what is LOC? Simply put, it's the loss of interest you could have earned if you had made a different financial decision. Let me explain what I mean. This is the simple but powerful example that I previously promised to show you how profitable it can be to benefit from LOC with IBC. Let's say you buy a $70,000 pickup with cash. Sounds responsible because you avoid paying a bunch of interest to borrow somebody else's money and maybe even save some taxes when your CPA tells you need a tax deduction by making a year-end tax avoidance purchase, right? But instead, if you had kept that $70,000 generating interest, compounding it only annually, and only 4% interest over 50 years, you would have $497,467.83. That's not chump change. It is literally what IBC automatically does for you without you doing a single thing differently. It is the lost opportunity cost of that one-time single pickup purchase. That $70,000 is a very small example, too. I've been talking about how much potential financial profitability you're missing out on when you're not operating as your own banker with IBC. I know what you're thinking. I don't have 50 years. That may be true, but here's the thing. You're not talking about just making that one single $70,000 purchase in your lifetime either. Think about all the other six-figure and seven-figure or larger purchases you need to make when you customarily borrow the capital needed to run your operation. Also, think about the control you give up in the process. Then think about how much interest and fees it's costing you, paying for all the capital you borrow for loans or notes on livestock, land, equipment, operating expenses, vacations, weddings, taxes, or anything else. Also, don't forget the interest you are losing on all that major purchases you make when you typically pay for things with cash. Each one of these is a potential LOC event. The interest you're losing by not using your own IBC account is depriving you of huge profitability, with the dollars lost not only to your family and you, but to future generations of your operation as well. Can you see now where recapturing this money would help make passing your operation to the next generation way more profitable and far more likely? I will show you exactly what I'm saying with some illustrations shortly. Every operation has financial inefficiencies that they are most likely not thinking about or maybe even aware of. It's like having holes in your pockets that you can't even see. Here are a few common examples. 1. Getting a tax refund. You're essentially giving the government an interest-free loan every year that you do this, only to get it all back in one lump sum the next year without a dime of interest. 2. Low insurance deductibles. You're paying higher premiums for coverage you might not need or ever even use. The insurance company gets the certainty to collect your premium payment versus the possibility you'll have a claim. This is guaranteeing they get your money versus the calculated possibility you'll have a claim to get anything back. It's just like the casinos in Las Vegas. The house always wins because they know precisely the odds of you having a claim. Your IBC account positions you to affordably and even profitably carry higher deductibles because that additional exposure is productively protected because it's collecting compound income tax-free interest in your cash value. 3. Unnecessary purchases or expenses. Every dollar spent is a dollar that could be growing. Spending money on a new pickup you don't really need at the end of the year because your CPA says you need a tax deduction is a good example here. The key is to focus on financial efficiency. It's not about becoming a penny-pinching miser. It's about making sure every dollar that passes through your hands is doing as many jobs as possible for your benefit and not at your expense. Every dollar that passes through your hands should benefit you in some way because if it doesn't, by default, it's benefiting somebody else.